Hello, my name's James Hughes, Chief Market Analyst here at Scope Markets, and here is your daily briefing. European markets are set for a mixed open this morning after Asian shares fell lower following on from sell-off on Wall Street on Friday. Markets have been quite rightly nervous over the last few weeks amid the coronavirus outbreak. The crisis shows no signs of letting up, with Italy and Spain still on lockdown, the UK still not at its peak, and the US reporting an escalated amount of cases and deaths on a daily basis. The stimulus programme from Treasury Secretary Steve Mnuchin in the US was finally agreed over the weekend, but it seems that markets are starting to try and make their own mind up about whether governments and central banks have added enough stimulus or whether more will be needed. There was optimism last week after a strong market recovery, but the sell-off on Friday, coupled with the underlying nervous feeling around markets, leaves many asking what sort of recovery we will see. Last week certainly bucked the trend, but this week will be key in deciding the short-term direction for global markets. Currency markets have had to deal with added pressure on the US dollar, but that means we've also seen upside from currencies that have got severely hit at the start of this crisis. One of those was pound sterling, which many believed was over-aggressively sold at the start of this crisis, which is why we've seen such a strong recovery for the pound, most notably against the euro and the US dollar. This looks like a high beta trade at the moment, with the market reacting to the overextended sell-off. Like many markets, it will be a case of waiting to see this week and see how the market plays out to see if the recovery is in its early stages or whether markets were just pausing to take a breath. This week sees economic data take centre stage, especially at the end of the week, as both the US jobs report, including the non-farm payrolls, and the initial jobless claims are set for release. For the first time, it's likely to be the initial jobless claims which are more important to the market after last week's record figure showed 3.2 million more Americans claiming unemployment benefit. We will see a raft of other data, but such is the nature of the market at the moment, a lot of the readings will be lagging indicators as they are reporting on timeframes that had yet to be hit by the coronavirus outbreak. There will be added pressure on Asian markets, however, and the Chinese economy to start to show signs that there are life after the coronavirus outbreak. China is ahead of Europe and the US in terms of its dealing with this crisis, and with areas of China now starting to come out of lockdown, Europe and the US will be looking to that area of the world to see how any sort of recovery may begin.